Hey guys, this is Sandra, and I'm here to talk to you today about the ethics of accounting. So let's get started. I don't know about you, but when I go shopping or when I look for things, and if I ask somebody about a product that I may potentially purchase, I want an honest answer. And companies are like that too, and people who work inside of companies, I think they're like that too. They want an honest answer. Well, businesses should be ethical and honest in the way they run their companies. Remember, we talked about what accounting is. It's the language of business. And if we're going to be the language communicators, we need to be ethical in the way that we communicate. We talked about those four different statements that we issue as accountants. They're income statements, their statements of financial position or the balance sheet, statement of cash flows, and the statement of retained earnings. So when we communicate those statements, we need to do so in a way that we're telling the truth. Basically, when we talk about being ethical, we're talking about being truthful. We need to, as accountants, avoid ethical conflicts. We don't want to be those people who will fudge or bend numbers just because somebody promised us a trip to the Bahamas, or that they'll give us the car of our dreams, or maybe give our children a free trip to Harvard or something like that. We want to always act in our client's best interest. You see, ethics play an essential role in giving useful financial information. As an accountant, I'm a CPA. As an accountant, I have to give the right numbers and tell the truth, even if it doesn't serve my good purpose. Investors and other users should have confidence in a company. It's accountants and its auditors that presented information given in financial statements in complete, relevant, neutral, and error-free ways. I can remember back early when there was all types of fraud going on in the accounting world. I live in Spartanburg, South Carolina, the county of, and there's a city, Greenville, South Carolina, just one city over. And I was watching on television, True Court TV. There was a company that was entrusted with people's money. People had invested in this company, and there was a woman on trial, and she came and she was decked out in all these expensive clothes, but her outfit was worth $2,500, $3,000. She had jewels on every hand. She was just coiffed. She was beautiful. And she had stolen so many funds. She had embezzled so much in funds. And she didn't have the good sense not to get on the stand dressed up in all this money. And I was like, for real? Come on, girl. She had embezzled. She had been entrusted with people's money. She had not been ethical. And one of the key things in accounting is that we must be truthful and honest as representatives as we give information to people and they entrust us with our funds. We've got to be ethical. Now, people will agree there might not be just one direct definition for ethics, but one of the things we can agree is that it means that we have to be honest in what we do. Now, there is a term that we use. We call it GAAP, but it means generally acceptable accounting principles. I go back to what I just said. There may not be a uniform definition for ethics, but I know that at the heart of that is honesty. It means, and GAAP comes along, is like that umbrella that says that there are generally acceptable principles that we should all abide by. We should all get under this umbrella and make sure that we abide by these rules so that we can have a uniform and honest system. GAAP are the various methods, rules, practices, and other procedures that have evolved over time in response to the need to regulate the preparation of financial statements. There was a time, believe it or not, when a man or a woman, their word was their bond. And since we have lost that sense of honesty in our society, we've had to regulate. The federal government has had to step in and say, okay, since we can't depend on people to be ethical on their own, the federal government has established the Securities and Exchange Commission to come in and say, listen, they've had to respond to all of the illegalities that have gone on in the financial world, including the accounting industry. And so people have had to step in and say, look, you can't do that. You can't steal from people. You can't lie on the financial statements. Remember those financial statements, the income statement, the balance sheet, the statement of retained earnings, and the statement of cash flows. You've got to tell the truth when you put those statements out, because people are going to lean and rely on on those being valid and relevant and you telling the truth. The Securities and Exchange Commission is that federal agency with the ultimate authority to determine the rules for preparing those statements statements for companies whose stock is sold to the public. Now, there is a limitation because the SEC can't govern that sole proprietorship or that partnership, but they can govern that corporation, and we're concerned with the corporation because we've lost our sense of righteousness in our business world. Then the government has to step in and say, okay, you got to follow GAAP. Now, we do have a board, we call it FASB, but that stands for the Financial Accounting Standard Board, and that's in the private sector, and it has the authority to set accounting standards. So we do have boards and we do have federal agencies that do react. Now, the sad thing is, or the thing that makes it slow to create accounting legislation, is that these boards and these bodies are reactionary in that they're usually not setting original rules. They simply react to the fraud. And so usually so many people and so many bodies and so many companies get away with so much. In the late 1990s and the early 2000s, you had a lot of fraud. Everyone's heard of, I'm sure, Arthur Andersen, which was the big accounting firm that represented Enron, which is a major company that defrauded so many investors so long ago. And just so many things happened. And so in reaction to that, we had a piece of legislation that was put out by the federal government. It was called Sarbanes-Oxley. We call it SOX. And it was intended to bring reform to corporate accountability and stewardship in the wake of so many corporate scandals. It went on for so long. You had so many people on the inside, though, who tired of it and who were called whistleblowers, who came along to tell that these things were going on. It was atrocious, the things that went on. You had companies who were cooking the books, who were putting out false income statements, false balance sheets, false statement of cash flows, false statement of retained earnings. Why? Because when you communicated to the world, when you told lies about how much money you had, and when you told lies about your cash flow, and when you told lies about your retained earnings, you made yourself look big. There's a little term where people would say it's hard to be big when little got you. So what they would do is they started to look big so they could get people to invest in them. They would lie to the banks through their financial statements to try to get loans that they could not pay back. It was horrific. And so nowadays, one of the greatest things that have to be done is that we've got to tell the truth. When companies falsely represent themselves through that balance sheet, through that statement of cash flows, through that statement of retained earnings, through that income statement, they make people rely on those false statements, and people will invest, and people will loan money, and people will rely on that falsity, and they will end up losing everything they have. Why? Because you lied. It's like a bad relationship. We step into a bad relationship. What? Leaning on the lie that was told. And so we must, as accountants, be ethical. We cannot lie. So we've got to know that that's not something that we can do. So in summary, we've got to be ethical as accountants. We've got to basically tell the truth. We cannot be liars. Generally acceptable accounting principles should govern us. We should stay under that umbrella. The Securities and Exchange Commission is that federal body that comes along to govern and make sure that we stay in line. We have FASB, which is that private board that can regulate our activity. And SOX is that piece of legislation that comes along to govern corporate activity. There you have it, guys. This is Sandra. You get in there and you get that work done, because I know that you are accounting champions.